Hi, everyone, and welcome to the latest PPP loan update. I want to start off by thanking our sponsor, Campolo Middleton McCormick, for our technology sponsor for helping us get this up and running in such a quick manner. So what I would like to do is first I'm going to pull the PowerPoint up and just talk a little bit. So I guess the first thing to talk about is that, number one, this has not yet been signed into law, and I assume that everybody's been following what's been going on. But if you haven't, the bill passed the House and the Senate and went to President Trump's desk, and now has and President Trump has sent it back to Congress, stating that one of the provisions in the bill is a $600 stimulus check per taxpayer, and President Trump said that he wants that to be $2,000 or $4,000 per couple. So that's where it is right now. We're waiting to hear more about that. But in the meantime, he hasn't said anything about the PPP loan provisions. So what we are going to do is here. So that's a little bit about us, a little bit about me. So this is the agenda for our meeting today. I know this is on short notice, and we wanted to be respectful of everyone's time. So what we've got is we're going to talk about the tax treatment of the current PPP loans and what that's going to mean. Then we're going to talk about second draw PPP loans as it's discussed in the bill. And then we're going to talk about the other PPP related issues that are in the bill as well. So those are the three primary topics that we're going to cover. That's the order that we're going to cover them in, because I think that's probably the order of priority for most of the people that are, that are watching this. So why don't we start with the tax treatment? So the IRS had come out. So this law had passed. The CARES Act had passed back in March. And then subsequent to that, there was the IRS had come out and said that that even though the loan is not taxable, the expenses related to forgiveness of that loan are not deductible either. So it was so there was a negative impact on taxpayers. And Congress had said that was not the original intent of the CARES Act. And in this law, and in terms of priority, this law takes a higher priority over the IRS revenue procedures that were issued. So this law states, and I have it right from the law, that with regards to the forgiveness of the PPP loan, that no amount shall be included in gross income of an eligible recipient by reason of forgiveness of indebtedness, and no deduction shall be denied, no tax attribute shall be reduced, and no basis increase shall be denied by reason of the exclusion from gross income provided in subsection 1. So in essence, what that means is that the proceeds of this loan, when forgiven, are not taxable income. That's number one. And number two is that the deductions related to forgiveness continue to be tax deductible. So that's great news for loan recipients. And I've said this many times before, that as more clarification has been issued, and more laws and rules have been issued, they seem to continue to go in the borrower's favor. It's not 100%, but for the most part, they do go in the borrower's favor. Now, like I said, so that's great for borrowers. Now, there's a couple of things to to think about when it comes to this. First thing is our basis issues. So to give an example of this, if an S corporation receives a loan of, say, $500,000, PPP loan, and that loan is used to pay covered expenses. Covered expenses meaning payroll expenses, mortgage interest, utilities, all of the things that were in the original act that have not been changed. But as long as the proceeds are used to pay those expenses, then you get those. The loan gets forgiven, and you get the tax deductions. Now, if otherwise the taxpayer had a break-even year, had zero profit or loss, the fact that they took in $500,000 of loan proceeds and then paid $500,000 of expenses could give them an overall loss of $500,000. If that's the case, the question is whether they have basis in their S corporation that will allow them to take it. As I said above, number 2 says that that no basis increase shall be denied. However, what it does not say is when you get the basis increase. And under the law as it stands now, the basis would not increase until the loan is forgiven, which for many taxpayers will not occur until 2021. So if the loss happens in 2020 and you don't have sufficient basis to take that loss, then you're not going to get the benefit until you do have basis, which is 2021. And it's critical that you speak with your CPA or tax preparer to ensure that you have basis in the entities, so that you can get the loss, or maybe you don't want the loss, but either way, there's some planning that needs to be done there. So that's a critical point, which could come out in a technical correction. But if we don't get that until after December 31st, then you only have until December 31st to increase your basis, either by putting money into the business or assets into the business. So again, that's a critical point. That's number 1. Second issue is that we have to see whether or not the state will decouple from the federal. So what that means is will in our case, so in many of our clients' case, New York State, will New York State say, it's nice that the federal is going to let you take those tax deductions, however, we're not. So you're still going to have an increase in income at the state and possibly city level. And that's a decision that's going to be made on a state-by-state basis. So like I said, those are 2 critical points that, like I said, it's great that we got the, that it's not going to be, that the forgiveness is not taxable and that we're allowed to take the deductions. However, there is still some thought that needs to go into this. So that's, like I said, that's number 1. So like I said, so that was the first point. So the second point, or the second big issue in the bill, is this second draw PPP loan. So So the second draw PPP loan is a again, it's a second bite of the apple for certain businesses. And again, on the slide we have the definition of the businesses, and so it's any business concern, not-for-profit, housing cooperative, veterans organization, tribal business, self-employed individual, sole proprietor, independent contractor, that, and there are three main tests. Number one is that they employ 300 or less employees. That's number one. Number two is that they had gross receipts during any quarter in 2020 where the gross receipts were less than 25, or where there was a 25% or more reduction in gross receipts of that entity during the same quarter in 2019. So you're comparing quarter one of 2020 to quarter one of 2019. And if the reduction in gross receipts is 25% or more, you qualify for this second draw PPP loan. So that's the second, or you meet that qualification for this second draw PPP loan. And then for those who have already received the PPP loan, that they have used or have plans to use the full amount of that PPP loan, which I think is from our experience with our clients, it seems to be just about everybody. So again, those are the criteria for who is eligible. So who is not eligible? Any business concern or entity primarily engaged in political or lobbying activities. There is a list of businesses that are generally excluded from all SBA type loans. Public entities and private equity backed entities, similar to with the first round of PPP. Businesses that were not in operation on February 15th, 2020 are also not. And then entities that are owned 20% or more or otherwise affiliated as defined in the bill with the People's Republic of China. So there's a specific carve out that if an entity is owned 20% or more by people in or affiliated with the People's Republic of China, and like I said, it's defined. It's very well defined in the bill. But those entities are also not eligible as well. Let's see. So now, let's talk about the amount of the PPP2 loan. So the amount of this loan is it's a similar calculation to the first loan. So it is 2.5 times the average total monthly payroll costs incurred by the borrower, either during the 1 year period before the date on which the loan is made or calendar year 2019. So so many of us use calendar year 2019, and it'll probably continue to make sense to use calendar year 2019 to be in order to maximize the amount of the loan. So because of that, the second draw PPP loan in many cases will be the same amount as the first PPP loan. We're going to talk about eligible expenses, and there's actually a clarification on what's included in payroll costs. So that might actually increase the amount, but like I said, that's in general, it's probably going to be somewhere in the neighborhood of the amount of the first PPP loan. For entities in the NAICS with an NAICS code beginning with 72. They're allowed to use 3.5 times their average monthly payroll instead of 2.5. So that's restaurants, hospitality, the industries that were hit very hard by by COVID. And then there are additional rules for seasonal employers, for new businesses, and for businesses with more than one location. So let's see, and then so with regards to the second round PPP, if everybody recalls, there was a lot of concern and confusion. A client recently called it chaos when the first PPP loans came out, about the certification that said current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. Now, during the chaos that I just mentioned, the SBA came out with some rules that said that they will not question the certification if the loan amount did not exceed $2 million. So, so that was back around, it was probably April or May when the when the first round was going on, and then since then, for borrowers that received loans of more than $2 million, they came out with loan necessity questionnaires where they, I don't know if they're, I was going to say where they clarified. I don't know if clarified is the right term, because there are still a lot of questions around the questions that they asked. So they created these forms, Form 3509 and 3510, which are specifically for the entities that received more than $2 million of initial PPP loans. And they're trying to get to the necessity of the loan. So again, so that's and I mean, basically what the point of this is that we had the original certification. We've got more information about what the SBA thinks in terms of necessity. And now the question is, when the PPP2 loan application, or second draw PPP loan application comes out, what are those certifications going to be? And how clear are they? Did they learn anything from that, from that first experience, so that we, so that we can, so that it'll be clear, or more clear, as far as who really is eligible to make these certifications and who is not. Again, ideal would be if they said that if total loans do not exceed $2 million, then then everybody would meet that certification. However, we're still waiting. So once we get that, we're gonna we'll dig into that and see what it says, and how to react appropriately. So other provisions in the bill. So one of the provisions is that, or several of the provisions are that there are additional eligible expenses. So expenses that can provide PPP loan forgiveness. So one of them is are called covered operations expenditures, which are payments for any business software, cloud computing service that facilitates business operations, product or service delivery, the processing, payment, or tracking payroll expenses, human resources, sales and billing functions, or accounting and tracking of supplies, inventory records, and expenses. So those payments are includable in the expenses to calculate forgiveness. Covered property damage costs. So any property damage due to vandalism or looting from the public disturbances, those are all that were not covered by insurance. Those are also Those are also costs that can be used for forgiveness. And then covered supplier costs. So these are expenditures made to a supplier of goods for the supply of goods that, number one, are essential to the operations of the entity at the time which the expenditure is made, and two is is made pursuant to a contract order or purchase order in effect at any time before the covered period. So the covered period begins when you receive your loan, the PPP, second draw PPP loan. So if you want to use expenses to suppliers, you should have a contract order or purchase order in place prior to obtaining that loan, if you're going to need those expenses to get the loans forgiven. And then with respect to perishable goods, that's any those are expenditures at any point during the covered period, and we're going to talk about what the covered period is probably in another minute or two. The other additional expenses are covered worker protection expenses, so operator capital expenditures. I mean, in layman's term, this is to facilitate social distancing guidelines at work and comply with established guidance that was issued by any of the federal agencies and state agencies as well. And there are a number of examples that are included in the law. And finally, payroll costs were clarified to include group life, disability, vision, and dental insurance as well. So originally it just said health insurance, but now it's clear that these are included as well. And actually, so I mentioned that your loans for round two would probably be similar to the ones for round one. This is something that could increase the round two amount. And actually, there's a provision in this bill that allows you to go back and correct if you made any mistakes in the round one calculation, that you can go back and correct those and actually get additional loan amounts. For that additional loan amounts that relate to round one. That being said, we had several clients that were easily going to get forgiveness and actually have applied for it, and in some cases actually received forgiveness of their PPP loan, and there was it didn't seem like there was any calculation that was done that went back to recalculate the loan in the event that they incorrectly calculated it, either on the low side or whether they got something that they shouldn't have on the high side. So like I said, that was interesting. So this is what I just said, that borrowers have the ability to request an increase in the loan amount due to the updated regulations. So like I said, so that's there. Also in the bill, many borrowers also got the EIDL. So the advance is not taxable. That is clear now. Additionally, the original law stated that you had to reduce the amount of PPP loan forgiveness by the amount of the EIDL advance. And the advance is up to $10,000 depending on the number of employees that you have. But the EIDL, but under the current under the bill, you do not have to decrease the you don't have to reduce the PPP loan forgiveness by the amount of the advance. So you get the advance that's not taxable, and you can get full PPP loan forgiveness. Let's see. So as far as loan forgiveness goes, so there's going to be a new simplified application for loans under $150,000. That application is going to be a one-page application where you need to certify certain things. Our suggestion is that even though you're not required to submit all the documentation that originally was required, that you sort of put that package together, because the SBA has, I think it's 3 or 4 years to audit or question this. So, so like I said, our suggestion is to put that together, put it in a folder on a on a secure drive somewhere, and hope that you never need to open it again. Because thing is, if they come back and ask you 2.5 years from now to try to remember these rules and what was done, I'm sure it would be complete insanity. So, so again, so that's a suggestion. And then as far as the loan forgiveness, borrowers may now elect to use a covered period of any period of 8 to 24 weeks from the date that you received the loan. So from the date that you received the loan, the original PPP loan, you can use 8 weeks, you can use 9 weeks, you can use 10 weeks, and there's a host of reasons why you might want to use a shorter period than a longer period. But if you need the longer period in order to get full forgiveness, excuse me, for the most part, the longer period is probably going to make make the most sense, and the 24-week period could be. So, so like I said, I wanted to go through the provisions, and again, this is not yet law. We were hoping that by the time we gave this morning that it would have been signed into law, but that's not to be. So now we are waiting for, we're still waiting to hear what happens, and what I will do now is I'm going to open this up to questions. Let me stop sharing my screen, and we'll bring George and Fred back in. I know that we're just about out of time, but what we'll do is if you ask questions and we don't get to them, then we will we'll respond. So make sure you have your email in there. We are also going to send out the slide deck to everyone as well. I remember that the PPP is just a small part of the overall legislation. This was a $900 billion act, and there was actually another $1.4 trillion that was tacked onto it for non-COVID related type items, but the 900 billion, again, PPP is one part of it. There are charitable contribution rules. There are additional rules regarding certain credits. There are there's a 100% write-off for meals and entertainment in 2021 and 22, as long as it's in a restaurant. Or from a restaurant. There are stimulus checks as well. So like I said, so there's a whole host of additional items, and it looks like we're coming up against our time limit right now. So I think with that, that we'll say goodbye, and anybody that answered that asked some questions, we'll definitely get back to you, and keep a lookout on your email, because we'll be sending updates as more information comes out about this. Thanks, everybody. Have a great holiday, and we will see you shortly. Thanks.